Hello everyone. I'll continue with the remaining part of chapter 2. So we start with the concept of adverse selection. Adverse selection means individuals with higher than average chance of loss are obtaining insurance at standard rate. This leads to insurance companies having to pay out more than expected, which is not good for their business. So how can companies control adverse selection? They can do so by careful underwriting. Underwriting is the process of selection and classification of applicants. And secondly, the company needs to have policy provisions, that is, different exclusion clauses to ensure that the company does not have to make more than expected payout to customers. Now we compare insurance with gambling. What does insurance do? It handles a pure risk. Pure risk is something that leads to loss or no loss. And it is socially productive because both the customer as well as the insurance company have an interest in preventing losses. On the other hand, gambling creates a new kind of speculative risk, and it is not socially productive because one side wins and the other side loses. So it's not a win-win situation compared to insurance. Then we can compare insurance with hedging. In the case of insurance, risk is transferred by a contract. And what type of risk is transferred? Mostly pure and insurable risk. Hedging also involves transfer of risk through a contract, but the risk which is transferred is typically uninsurable. In the case of insurance, moral hazard and adverse selection are some problems faced by insurance companies. Whereas in the case of hedging, we notice that these are not a significant problem because the counterparties who get into hedging contracts, they are knowledgeable and hence there is less uh, chance of moral hazard or adverse selection. By knowledgeable, I mean both are available. Now we look at the different types of insurance. So we can classify insurance as private insurance or government insurance. Private insurance includes life insurance, health insurance, property, and liability insurance. And government insurance includes social insurance programs as well as other government insurance plans. So we'll look into each of them in details. What is life insurance? In this case, the insurance company will pay benefits to the beneficiaries once the insured person has died. And in case of health insurance, the insurance company will pay for medical expenses of the insured individual. Property insurance tries to cover for losses to personal property. Liability insurance tries to cover for legal liability due to property damage or bodily injury. Think about the liability clause in auto insurance. Then we have casualty insurance. This refers to insurance that is not covered by fire, marine, or life insurance. We can again classify private insurance into two categories. One is personal lines that takes care of individuals or families and provides them protection against loss. And the other is commercial lines. In this case, it is insurance for businesses, non-profits, and government entities. So what are the different types of uh, government insurance plans? The first one is social insurance program. Here, employers and employees contribute to a fund, and those funds are used to provide benefits as per the law. So this is the concept of social insurance program. One common example is Social Security in the US. Other insurance programs can be related to federal flood insurance, state health insurance programs, and so on. Now we look at some of the benefits of insurance. The first is indemnification of loss. So the insured entity is restored to their financial position prior to the loss. There is reduction in concern and fear. Now, insurance also serves as a source of investment funds. The insurance company is collecting premium from the customers and creates a pool of funds. That fund is used to lend to business or invest in different businesses, and it contributes to economic growth. Loss prevention, because we have discussed earlier that both the insurance company as well as the customer have a common interest in preventing losses. That is one of the benefits of insurance. And enhancement of credit. For this, you can think of property. If I have insurance for my property, it is easier for me to get credit against my property. So in this case, insurance is helping me to get bank credit. So these are some of the benefits of insurance to society. Just like anything in life, there are also disadvantages of insurance. The first one is cost of doing business increases. So in case of business entities, they have an additional expense in terms of maintaining insurance cover. For insurance companies, they have the problem of fraudulent claims or inflated claims from their customers. Another problem with insurance is that if the premium is high, it reduces disposable income among the customers and reduces their consumption of goods and services. So all in all, there are both advantages and disadvantages of insurance. That's all for chapter 2. Thank you.